Real estate investors, land developers, contractors, and especially build-to-rent community developers. Let's talk Provo-Orem-Lehi, Utah. This is your Market Minute with me, Corey Bohner. And this market is a perfect example of rent growth without full occupancy recovery, which should immediately make you lean in. Now, let's get into section 1. Let's start with the basics. Occupancy is sitting at just roughly about 81%, up about 0.9% year over year. So yes, demand is improving, but this market is still materially underoccupied compared to Salt Lake or Ogden. Over the last year, Provo delivered about close to 1,480 units and absorbed only about 1,320, leaving a small negative gap. That tells me the market is almost keeping up with pace and the supply, but not quite there yet. Let's get into section 2, rents and concessions. Here's where things get interesting. Asking rents are up 4.8%, and effective rents are up about 4.2%. That's a strong growth for the market, but still below the 81% occupancy. But concessions tell the other half of the story. 34% of properties are offering concessions, and the average package is 7.9%, which jumped 14% year over year. So rent growth is real, but it's being supported by massive incentives, not pure pricing power yet. Let's get into section 3. What does this graph show us? When you look at the ALN graph, you'll see occupancy trending upward through most of the year, while both market and effective rents climb steadily. That's not a spike. That's not a hype. That's measured recovery, with landlords pushing rents while still managing lease-up friction. Now, let's get into section 4, submarket action. Submarket performance here is extremely split. Provo BYU is the standout, 96.3% occupied, up 21.8% year over year, with effective rents up 4%. But that's about as healthy as it gets. Meanwhile, Orem, North Utah County, still sits at 82.7% occupancy. Basically, it's flat, but still pushing 2.8% effective rent growth. What's the translation here? Demand is hyper-concentrated by, of course, the university, BYU, and everything else is just playing catch-up. Let's get into section 5, pipeline and the future outlook. Looking ahead, supply is still coming. Provo and BYU has about 21 to 2,200 units in the pipeline, and Orem in North Utah County has another 2,000 plus units, and leasing activity spikes again in Q4 of 2026, which means this market has time, but not ultimately a runway to absorb what's already here. So here's the closing insight. So what's the takeaway? Provo-Orem-Lehi is a rent growth first market, not an occupancy first one. That works until concessions start doing much of the heavy lifting, which we have seen in the past year. If you're developing, underwriting, build to rent here, location precision matters more than ever, and projects near institutional demand drivers outperform fast. This isn't a market to spray and pray yet. I've got more markets coming soon, so follow, comment on the markets you're curious about. Do some research and dig in. And if you want a deeper insight on how build-to-rent can be done right in today's market, grab my free case study at coreybohner.com/case study.